how I would look at something that's not just purely noise is to look at how will the technology impact people and what's the size of that impact. If the size of the impact is massive, then that's not noise already. Noise is when, well, it's a great technology, it's a nice to have, but it's not going to impact a lot of people. Right? And at the same time, it's a great technology, impacts a lot of people, and can you scale that? So that's how I would differentiate between what will become very big versus noise.
Alvin Foo is a venture partner at Zero2Launch and a serial entrepreneur who transitioned from senior leadership roles at Google and Nokia to building tokenization infrastructure. With over 25 years in Asia-Pacific tech and a track record of anticipating technology shifts by looking 10 years ahead.
Stablecoins, extensively USD-backed, will lead to a dollarization cross. So that's another issue that every other country will grapple with as well. CBDCs are not the solution, but overall, I think a lot more stablecoins with local currency-backed stablecoins will emerge over the next year or two, I think.
I personally don't think all that stablecoin will survive. I think at the end of the day, right, the stablecoin that will probably work would be stablecoin that pegs against US dollar, because US dollar being the international currency, right? The most widely accepted currency, that will be the foundation of stablecoin.
Alvin, welcome to Alpha and Ash.
Welcome. Thank you very much for the invite. I look forward to our conversation.
Yes, likewise, and let's dive in. You're someone who's seen hype cycles, who understands the power of narrative very well, especially more so in crypto, I think. What draws people to a hype?
In crypto, is if you ask me one word, is purely to make money, right? That's how crypto really started as a huge movement where people saw the opportunity at a very early stage. Not only this cycle, the cycle before, that they saw the opportunity that they could make money, right? And that's how most of the hype actually started. That people think that they can make money, they can jump into the bandwagon and ride with the wave, and that's how the idea of narrative is being formed.
Right. So making money is a basic theme. Let's go back into sort of your journey into crypto. You had a sort of a very illustrious career in media and advertising. So tell me about that journey and then how you moved into crypto after that.
Well, I never had a plan to move into any of this thing that I'm doing right now, because if I were to look at my entire career, I actually started my career as a lawyer. So if you look at my legal practice then several years ago, and then coming into the tech space in sometime maybe, I joined the internet business sometime in 1997, very early days, and from that onwards, right, it was really through continuous learning and trying to understand the entire ecosystem within the internet at the time that really drove me into what I've been doing today. So if you look at my career, it spanned almost 33 years, almost 33 years in all kinds of different roles. But tech alone, almost 28 years. So 28 years from the inception of internet in 97, that I started a voice over IP company, to satellite broadcast. I started doing something very similar to what Elon Musk is doing on Starlink, but back in year 2000. And that was when we were trying to bring broadband through satellite through many parts of Asia. And in that time, because the technology was very early stage, there was already satellite, but the way of receiving it is no different from now, but except that it was not low orbital satellite at that point of time. So we were using C-band, 2-meter dish, right? And to receive internet, going back, and that was a great solution 25 years ago. Of course, if you compare to what Starlink is doing, right, that would be dinosaur. So there was really no plan how I got onto Web3. But if there was one thing that I would say really drove me to where I am, is the fact that I continue pushing to learn, continue to pushing what's ahead. I like to always take this, and I always have this notion that you have to look at least 10 years at least 10 years ahead. And you start to look at 10 years ahead, everything that you do that you look at 10 years ahead, then you can start to, work backwards and see whatever that you're doing right now, would that be relevant in 10 years from now? And of course, each of the technology that I've been working on was something that I've been looking at, a bunch of technology, but I've been looking at least 10 years before. So if I'm looking at Web3 now, that I've been full time since 2020, and I've been looking at it since well, I will not say that 2012 was the point where I actually look at blockchain, even though someone was asking me to look at Bitcoin. But at least that I started looking at it from 2015, 2016. So everything that I've been doing is something that I've been exploring. If not at least looking at it at least 5-10 years ago, and that's how I kind of like got onto like AI, got onto blockchain, Web 3.0, and so forth. And similarly to all the other earlier technology, mobile internet, e-commerce, live streaming, social media, and so forth. So it's a span of looking forward many years ahead and working backwards. So that's how I look at technology, and that's how I got myself into all these various technology that I either incubate or I'm investing in.
You're almost kind of painting this picture of looking at 10-year cycles and how you've recalibrated your path into different technologies, starting with the internet to transitioning to crypto. And it's very, very fascinating to sort of learn about using really looking at satellite bandwidth for internet transmission at that point in time back then. And so would love to understand a bit more about that. What happened to that? Was it all idea then, or was it a technology you could take forward? Did C-band transponders sort of support that?
Well, in those days was really because I saw the opportunity, because it was a problem. It was really a problem that a lot of companies, both at the government level, at the provincial government level, and also companies who were located in very remote area, and at that time access to broadband is mainly in major cities, and that a lot of places and also location of these offices that are really remote in at least in Asia Pacific, that I saw that if I could bring satellite broadband, well, at least in those days, right, is anything faster than at least a 256K connection, that would at that point of time, I mean, it's probably nothing these days, but at that time, if you can get to 256K in those locations, that you can provide telemedicine, high-speed internet access for school and so forth, right?
I remember the sort of the static of the modem as well when we used to connect to the internet back then.
I'm sure you remember 9.6K, 14.4. So these were dinosaurs, but we saw that as an opportunity. So we brought that the entire technology. I mean, we don't own the satellite. They were already a lot of providers that we can actually lease a transponder from. And then what we needed to do was to get all the user terminal. So the user terminal will be the router, the receiving signal, and of course the satellite. And once you get that, and of course with the base station, right, with the Earth station, you can get the connectivity almost to that covers at least a third of the area of the Earth, because most of the C-band satellite could do that already.
So obviously these were not the low orbit satellites; these were high orbit satellites, and satellites were obviously being used for transmission. But here you were talking about directly receiving on a device for a user, as opposed to going through the entire network.
Correct. I mean, it's not rocket science, right? Satellite has been around for a long time. I mean, the maritime and the government has been using it for a long time. It's just that now you put an application layer where you want to be able to receive, right, IP protocol, right? Once you get that, right, so you just probably need the router, and then use that as a transmission and receiving terminal, and you're done. And then once you get all the signal on the ground, right, then you connect to the LAN, and you have connectivity to the entire, to at least to the entire office at that point of time.
Right. Okay. So tell me, what's your framework for sort of separating the signal from the noise in these 10-year cycles? We've there have been so many so-called meta changes that have happened over these decades, and many of them have just been noise in effect. But so how do you differentiate them? What's your framework if you were to share that?
How I would look at something that's not just purely noise is to look at, number one, how much how will the technology impact people? That's number one. And what's the size of that impact? If the size of the impact is massive, right, then that's not noise already. Noise is when, well, it's a great technology, it's a nice to have, but it's not going to impact a lot of people, right? And at the same time, it's a great technology, impacts a lot of people, and can you scale that? Now, if scaling becomes very costly, now, I want to go back to the satellite I was talking about. Now, while we were able to roll out to many users, but we were not able to scale very big, simply because the cost was just beyond the reach of many companies, because transponder was not cheap, right? And the end user devices were not cheap. So you need to get to very sizable scale now. And if you look at Starlink, right? Starlink has probably got 5 million users, right? And we were at that time looking at thousands, probably we're looking at thousands. So we were not able to scale that up, and we don't own the satellite transponder. We probably have to lease the Earth station. So to get to certain scale now, well, it impacts a lot of people, but to get to that scale at a price point where a lot of people can use that service, that becomes difficult, right? So we were only able to offer that to corporates, to government authorities. So it's very limited. Now, so that's how I would differentiate between what will become very big versus noise.
Okay. So the framework, according to you, is A, how that tech will impact, B, what is the sort of size of that impact? Is it just small or is big? And thirdly, whether we can scale it or not. So that kind of differentiates. So can you apply this framework to crypto and sort of let me know how you think about it?
I mean, it's quite obvious, right? I mean, this is a great technology that really revolutionized not just finance, yeah, because it may have started in the finance sector, but the way I see it, right, it can impact all category. So it can go across supply chain, it can go across e-commerce, social media, because of the benefits of blockchain, immutability, transparency, and so I don't need to go through all that. But the fact is that it has all that feature, right, to impact many businesses, and so that impact is a big impact. Depending how you quantify, there are lots of reports that's trying to forecast how big would that business be in multi-trillion dollars. So it's a huge impact, and it is scalable, very scalable. I mean, the technologies are there to scale. The cloud is there, right? The people are there, right? The technologies are there. So this could potentially disrupt not just one sector or just one category, but multi-category. And similarly, if you apply that to AI, it's very similar. And of course, now AI being a so-called infrastructure layer, and you put that into blockchain, right? Perfect. I think it's a great marriage, and that would impact huge. Globally, multi-category and very disruptive. So if I were to apply that to blockchain or to Web 3.0, it's self-explanatory.
Self-explanatory, yeah. I saw that 4 years back. That's when I was orange pilled into this space and fully on board with that. But then let me push the envelope here and ask you, why is it that in spite of everything that fits in the space, in from whichever lens one looks at, we still have the best innovation something like stable coins, basically dollar on chain, is being looked at as the most fascinating innovation in crypto. So where, why are we here?
Well, stablecoin is an easy application. It's something that everybody understands, right? Someone who does not even understand crypto won't understand stablecoin quite easily, because it's a digital currency, right? That is pegged to dollars, and that's what's lacking before stablecoin, right? In the year of 2017, where there was only Ethereum and only a bunch of coins, right? It's very hard to scale, because you only had that many coins, and most of the coins are ever fluctuating in price, right? There's no stability, and stablecoin kind of like fix that. And now you bring stablecoin into the picture. Not only that you can trade digital, right? Digital currency using stablecoin, even the traditional business are now leveraging stablecoin, something that they can understand, and it's very easy to transact cross border, and is on chain, right? So that clearly explain why stablecoin is the basis. And then if you ask me from my standpoint, stablecoin kind of like power up the entire Web 3.0 economy. It makes it very easy and seamless for anyone to apply it. I mean, it's so easy, right?
You founded multiple companies in the space, or invested. How do you define? How do you look at yourself? Are you I mean, and it's a spectrum, but what would you look at yourself as more? A builder, or a builder founder, or sort of an influential thought leader in the space, or an investor in within crypto? How would you look at what takes more of your mind space?
Sri, I constantly ask myself that question all the time. I've been asking myself all the time. I danced between all those roles for several years. I mean, ever since I've been building my career, I've been dancing several roles. When I started my own company back in the 90s, I have to multitask. Okay.
Mm.
So I've been multitasking my life. And especially when you're a startup founder, or you are building companies, right? It's very hard to define your role. It's not like when I'm with a corporate company, where my role is self-defined. Or if it's not self-defined, either that someone else will define my scope of work, right? But when you are running and doing things on your own, where your setup is very small, it's very hard to have that one role. Yeah, but if you were to ask me if I have to define one role, what I'm good at, right? What I'm good at, I think I'm a builder. I think I'm a builder. I think I'm someone, I'm the one that builds, and I'm the person who ideate and build, and that's what I do. That's what I love to do, right? But in my capacity, I kind of like do many things. So kind of like I multitask all the time, right? As much as I want to fix myself on one role. It's very difficult, because I don't have a setup like a multinational where the role is very defined. In my role, I just do whatever that's that's at hand, that I need to fix a problem. Basically, right now my role is that I get into the problem and fix it, regardless whatever that may be. So, Mr. Fixer, right? I'm sure
All right.
sure it's the same role that you're doing. So the same question
Yeah,
you're
as
throwing to
a
me, very similar to the question I would throw to you.
yeah, yeah. I mean, definitely as a founder, especially startup founder. I mean, when I founded my second company after sort of scaling up, exiting my first. In fact, I started it. I started on a protocol whilst we were still scaling up, building out towards the exit for my last company, Milk Mantra. And I thought that as a second time founder, a lot of things will be different, and you will not be doing a lot of the things that you are doing as a the 10 things that you do as a founder. It's exactly the same. As a founder, you're always hustling, and you're having to essay all of those roles. If it's a small team, you're you're your own chief of staff to your CEO to everything, and also making sure that the team's having a good time at the office after hours as well. So I totally sort of and that's the thrill that founders enjoy as well. It's the whole 0 to 1 journey. I get that, but still I wouldn't sort of you essay different roles as an investor, as a from that perspective, I was kind of looking at what more, but clearly sort of it seems it's all of this. Which amongst your the companies you had, so NASDEX I believe was one of the early RWA projects, right? And so can you paint sort of outline some of the projects that you've been actively building, and where they are in the space right now?
Right. I mean, I've done a lot of projects. I've launched many tokens, several tokens, but NASDAQ is very close to me at heart because it was one of the projects that I initiated in 2021 to be more precise, somewhere early 2021, where tokenization is very, very early stage, and nobody even talk about tokenization. I mean, there are very few, and we were focusing on an area where I thought was really probably the lowest hanging fruit in tokenization was to go and tokenize equity, because everyone understood equity. Everyone heard of Tesla, Apple, Microsoft, and so forth. So everyone knows what is an equity, what is a stock. So we went ahead and tokenized stock. So that was our first inroad into tokenization, tokenizing something that everyone is very familiar, and also very sizable. I mean, the equity market alone is about what, $100 trillion. So very sizable. And even whether you're degen, whether you are entering, Web3 in crypto, right? You understand that. So we don't have to explain that much. So education becomes very simple. So we got in that space, and there were already a few players, people like Mirror.finance. These were the gang from Luna and also Terra. And then you got synthetic stocks on synthetics, and then even some of the centralized exchanges at that time, like Binance, Bitfinex, and so forth, right, had some form of tokenized equity on the exchange in very early days. Up until when Terra Luna imploded in 2022, then things started to change, because SEC was then going up taking the action against Mirror.finance, and that's that's where we kind of we needed to pivot already, because we saw that this area is going to be highly regulated at some point. And and after that point, right, most of the synthetic stocks providers, all the startups, basically they either shut down the service, or they have decided to pivot, and we were one of them. So that gave us an opportunity to reconsider what are the other options, and that's how it gave rise to the concept of a regulated RWA marketplace as early as 2023, very early stage, where RWA was probably talk about, but still really early. That was when we started to put the pieces together. What do we want to do in the RWA space? What do we want to tokenize? There are a lot of assets within the RWA, but we were at that time trying to figure out, should we tokenize T-bills? Should we tokenize real estate? What should we tokenize? So we were playing around with several assets, thinking, whether real estate will work. And then we kind of figured it out. Real estate have to work, because most of the, good asset on real estate, they don't even need to be tokenized. They will be sold quite easily if those are really high, high value property, prime property. They don't even need to be tokenized. I mean, the REITs will go and buy them. The high net worth individual will go and snap them up, because these are high value and also prime value. So so we kind of play with several angle, and ultimately we kind of figure that out, that the best area for us would be private credit. So now a lot of our efforts are going into focusing on private credit. So basically tokenizing private credit opportunities and projects, because it comes with much higher yield, much higher than real estate, which is usually 5 to 6%, and you got the holdout period is long, right? And private credit usually is like from 2 months, 3 months, 5 months, 6 months. So it's very short term, and with a much higher yield, 15% to 20% depending. So we're focusing on an area where there's a lot of requirement, greater yield, because the crypto community are obviously always looking at higher yield. Because if you want something safe, right, you could go to Ondo and buy T-bills already, tokenized T-bills, right? So we want to focus on higher yield. Yeah, of course, higher yield comes with higher risk, but that's the name of the game, right? So that's how I came up with that idea in 2021, and it has went through that a few pivots, and now we are at the point where we're very comfortable with private cap credit and where it's heading right now. And this is where we want to ramp up in building more such opportunity and projects, and at the same time beefing up our tech platform in terms of building a much more clearer roadmap, right, to support that model.
Okay, all right, that's interesting. So essentially take crypto money, bridge it off chain into private credit and to individuals or SMEs. What is it like?
I mean, it's now it's not just the web community, the Web3 community, because the Web3 community is the small community. The idea is to be able to onboard the Web2 community. Now, if everyone focus just on Web3 community, you will never grow the market. No, the problem isn't just Web3, right? The problem is how do you make it seamless and easy for someone who is on Web2 to get on Web3? And if you don't get those people on board to Web3, Web3 will always be the tiny Web3, right? So the challenge for the people within the sector needs to think beyond just the Web3 adopters. We need more people from Web2 to adopt, and only when the adoption grow exponentially, right, we're not going to be able to get there. And then that also explains why there's tiny liquidity within RWA, and as I'm sure you're very familiar in this area. So
Yeah.
So we need them, because without them, there's no liquidity, and the liquidity doesn't just come from individual; it comes from the institution.
Yeah.
Right. So regulation is great because it will provide clarity on what we can do and what we can't do, and that will also provide comfort to institutional participation and also retailer.
Right. No, but Alvin, just to explain the model, so the private credit, obviously for the investor, it's about higher yield, right? And but for the private credit is for whom? The yield is obviously being generated from there. So the private credit is from individuals or from or to individuals or to institutions, SMEs, SMBs, and stuff like that.
So the private credit, the token issuer, i.e., those who issue the token for this private credit project, they are mostly companies. They're not individuals.
Okay.
Right. Companies. I mean, they are companies who has got tons of requirement to raise money to do their business.
Got it. So it's
financing.
basically corporate debt, tokenizing corporate debt, for example, is okay. All right, got it. So I was thinking whether it's more like sort of the Goldfinch model of taking capital, utilizing crypto capital for off-chain funding, and sort of generating yield from there. So, but okay, so this is tokenizing corporate credit like structures, right? Corporate debt like structures on chain, right? Okay, all right, yeah. No, now that that's actually a sort of, it's a huge market, and the yields are high, and in many cases they are backed by significant collateral as well. So it's a pretty safe in that sense, right?
Correct. Correct. Absolutely right.
And how does regulation intersect with this? So would you operate within the confines, borders of a market, or how will tokenization help there? And what's the current regulatory framework around this?
I think most of the jurisdiction are regulating it in their own way. Some are probably more stricter, like Singapore, like the U.S. and even Hong Kong now takes a very. I mean, these are financial hub. These are traditionally financial hub. I mean, if you are financial hub, regulation is everything, and they're going to be very strict. There are markets where it's a lot more friendly. If you take Dubai, if you take Malaysia, if you take some of the more friendlier market, they are in the Philippines, right? And they are a lot more flexible in a sense that they actually allow you to formulate some guidelines where they will work with you in terms of how to come up with the framework, right, on regulating or and complying to their requirement. So, i.e., if you take Philippines and Malaysia, what you do is that now they just want you to make sure that number one, the token issuer, right? You need to audit them. You need to KYC them, right? You need to make sure that these people who are coming in, right, has been properly audited, have been properly KYC, and they're legit. And at the same time, you also need to do KYC for the users as well. So the investor has to be KYC, and the investor has to be informed, right, of the risk. So risk has to be informed. Risk has to be communicated. So at least they know what they're getting in. So the litmus test is legitimacy. Is basically these are legit projects. Now, because in the past, right, lots of project on the decentralized exchanges, right, most of them are scam, right, several scam, and yeah, the investors may know or may not know, right, but the fact is that many people got scammed. But in the real world, where there are regulation in place, right, the regulator would definitely wants you to make sure that when you are operating a service, you have taken due diligence, right, to make sure companies are being audited, those credits are being audited, collateral has been valued, and at the same time, the investors has been properly informed. And once that's done, at least, right, these are legit, and there's legitimacy, right, in launching these projects.
So is that the main focus now, tokenizing private credit?
I mean, for NASDEQ, yeah, for NASDEQ. I mean, that's what we've been doing at NASDEQ for the last one. This is our 4th year.
And what else? What's your next big bet?
I mean, as far as a lot of our investment right now, we are focusing a lot on RWA, in the Web3 space. I haven't seen. I mean, to be candid with you, right now, the landscape is changing quite rapidly. I've not really seen an upcoming narrative. I mean, we have seen memes, we have seen AI, we have seen several narrative along the way, but not really. I've not even actually seen what's coming in the next couple of years from now. AI has been long done. I mean, it's still there, but I think this narrative is a difficult narrative, especially in Web3.
Right. Yeah. So yes, I have been sort of having this conversation, and I've written about it as well. How this whole I mean, we keep talking about this AI and blockchain intersection, but there are two clear, distinct areas. One is as an intersection in terms of infrastructure. So where you take, and it works both ways. It's about let's say decentralizing the entire AI stack from compute to data to storage to inferencing, all of that stuff. And the other way, also using AI to make blockchains more sort of efficient, secure, MEV protected, all of that sort of stuff. So there's this whole infra play, but I think the bigger play is really going to be about the intersection on the application side, about how more consumer-facing applications on-chain can be built using AI for more risk-managed or discovery purposes. That if it's in DeFi, it could be about alpha discovery. If it's in something else, it could be about managing the discovery or risk there. So I think the application piece is where a lot more will happen. But very clearly, it's very fast evolving space, a bit early in many ways as well. And here I want to sort of ask you. I mean, I know we touched upon early on just before the starting out the pod that you operate between KL, China, and Singapore as well. So what's happening in China? What's sort of your sense of China's view on crypto? I mean, obviously there's an official ban, but there is so much Chinese influence, capital, and many of especially on the exchanges sites, many of the largest exchanges are sort of in many ways managed by entrepreneurs from there. So what's your thought of what's happening there? What's your view on how it's going to pan out?
Well, I think China has no role to play in the, we call it the public blockchain sector. Blockchain is a technology that's well recognized in China. In fact, the entire chain in China operates privately; it's not public, right? And the government has taken a stance long time back in 2017 to ban crypto completely. I'm not bullish in terms of whether China will relook into maybe to unban crypto at some point, or even unban BTC, even Bitcoin. I'm not bullish. I'm not positive. I've not heard of any news or even any updates as far as that's concerned. So I don't think China has a role to play. In fact, they even ban mining as well. So you can tell. I mean, the entire crypto ecosystem, it's not in China. And at the same, well, on the flip side, China, the Chinese people, they play an important role in the crypto sector, hugely important. From, you just mentioned that, right? From exchange, Bitcoin mining platforms, right? Bitcoin mining, they may not be mining in China, but they're mining somewhere else in the US, in the Europe, and I mean they are all over. I mean, so the Chinese, yeah, all over. I mean, they're all over, and not only that, they are also involved in projects. They are launching token. They are supporting the entire ecosystem, and Chinese in general are still very active, even on the retail side, as though they are not able to access many exchanges directly, but they are still able to go through the or go to the firewall through a VPN. So the Chinese are still very active. You may not be able to see them because they are all coming in through VPN, but they are they play an important role as far whether that's going to be on the tech side or even on the retail side. And on top of that, I mean, a lot of the tier one, many of the tier one, tier two investment crypto investment companies are Chinese companies, right? So I think they're very active, except China as a country, right? Doesn't plays no role as far as crypto is concerned, right? But the people of China, they are all over supporting crypto. That's my view.
Yeah. So I mean that's the reality, and you and your view is that that's not going to change very soon, and the government's sort of approach to crypto in China.
Anything
Or
that
Mm.
I mean, anything that really rivals or even challenge a currency, right? I mean, China has got RMB. China has got their very own digital RMB as well, right? So anything that challenge them, right? I don't think they would ever allow any currency, be that BTC or whatever, to challenge it. So I think it's very unlikely that they will open up the floodgate to challenge their own currency.
Yeah, right. And especially though we talk about stable coins, the fact is that stable coins, if extensively USD backed, will lead to a dollarization across. So that's another issue that every other country will grapple with as well. CBDCs are not the solution, but overall, I think a lot many stable coins with local currency backed stable coins will emerge over the next year or two, I think.
Yeah, I mean, there are lots of stable coin that's being issued. I mean, I think there's also a stable coin in Singapore denomination, right? Yeah, not popular, but there's one, right? And then there's a euro stable coin. Yeah, I mean, there are several stable coin. I I I I mean, I personally don't think all that stable coin will survive. I don't think we need all that stable coin. I think at the end of the day, right, the stable coin that will probably work would be stable coin that pegs against US dollar. Similarly, because US dollar being the international currency, right? The most widely accepted currency, right? The Tether and USDC, right, will probably be that will be the foundation of most of, I think from my standpoint, right, that will be the foundation of stablecoin. It's very hard for the rest to challenge. I mean, look, PayPal tried. Many people tried, right? And it's again, I mean, they are early into the market and they've grown so big, and so successful.
Yes, yeah, I mean that's something which will evolve as well fast from here onwards. But yeah, there are the entrenched network effects, especially for Tether and increasingly growing USDC is sort of significant. So yes, I mean, let me ask you if you were to put your 10-year lens on crypto and DeFi, where it is heading to from now, what would that be? I don't want to put. I know in crypto we generally tend to, after everything that happened, we tend to take more shorter cycles. But let's pan out and see what's really the 10-year view on crypto from where we are right now.
I think in 10 years from now, right? I mean, now we are we're really in an early stage where everyone is trying something, right? I mean, there are so many blockchain out there. There are so many tokens out there. There are so many narrative out there. And I think in 10 years time, you probably have maybe one or two major chain. You don't need that many. It's just like an operating system. We only have like two. If you include Huawei, probably three, right? Three operating system globally. Similarly, if you're looking at the blockchain in 10 years time, right? I reckon, you probably end up with one or two or three chain maximum, and probably a lot less coin, more mature market. I don't see a fully decentralized world. I don't think that will ever be possible, but I will see a world where it's hybrid. Whatever that works on chain will be on chain. Whatever that sits on the back will always be riding on the traditional network, right? So it won't be a situation like most people would think that it's fully decentralized, because there are a lot of stuff that will not be fully decentralized. And I think it goes back to the same thing, that government sovereign state will never allow certain things to go fully decentralized. For example, taxation, right? And how you manage a country and so forth. Stablecoin would probably, like I said, it's going to be the foundation that really, that it's like, if you look at whatever is dollars is today, stablecoin would be what would be Web3 in 10 years from now. Of course, BTC, again, it's going to be a lot more valuable in terms of price, and they are probably more mainstream than anything else. I think by then everyone would have some form of holding of BTC, either on a balance sheet or either that individual having that in their account. And for government, it's going to sit in their Federal Reserve. So it's going to be, by that time, there's not going to be a conversation between whether this is crypto versus fiat, right? It's just like, there was a conversation there's a demarcation and differentiation between what's offline and online, right? Or retail and e-commerce. People don't really talk about retail and e-commerce now. I mean, retail is retail, regardless of whether it's just e-com. Online and offline is just a channel. It's just how it's being the network is being designed, but it's still retail. So in the future, right, money will be money, right? Whether you're going to call it money or you're going to call it fiat, you're going to call it digital, whatever it's just going to be one form of money. It's going to be value. I think in 10 years time, it's going to be value. So BTC fiat and so forth. It's going to be just value, and nobody's going to differentiate between whether this is going to be digital money versus offline money, right? And what else? RWA.
What
I think
about,
by then,
yeah,
whatever
what
that can
about
be
DeFi?
tokenized.
Hmm.
Oh, my take on DeFi, I think DeFi will complement TradFi. I don't see a world where DeFi will win over TradFi, right? Because TradFi is a highly regulated area, highly regulated, right? But I do believe that in some of the space within DeFi that works better, right? Ondo Finance has already demonstrated that. So anything that can be tokenized and that could work better on chain will be on chain, right? Whatever that needs to be regulated will be regulated. I don't think there's a world where we're going to decentralize everything. I mean, I always look at the concept, but now search works very well on Google, right? It has worked very well, and the question of whether it will work much better in the decentralized world, I always have a question mark. Now, in technology, right? Technology works. It's just like if you look at most people, the people on the street, right? He doesn't give a shit whether you are Web3 or Web2. He just wants something that works, right? I mean, a general user, a normal user doesn't care whether this is an e-wallet or that's a hard wallet, cold wallet. I just want a wallet that works, right?
Yeah.
I just want a solution that works. So whether what works behind the scene, I don't care, right?
In fact, when that happens, that's when we will see the big mass adoption of crypto. I mean, people
Correct.
won't even realize there's a blockchain. I think, yeah, go ahead.
Absolutely. I mean, I think a lot of people ask me, now the day that we are still talking about crypto, blockchain, and we are still talking about decentralized, we're still at developer state. This is a dev stage where we are talking about, where these are all the savvy people. That's why we're using such term. But the guy on the street don't use this term, man. Right? They don't even know. Can't tell between a cold wallet and a warm wallet, right, or a soft wallet, right? So to them they don't really care, right? And when the day comes that we don't talk about any of this stuff, we know we have gone mainstream. Just like EV, right? We're still talking about EV. A car is a car. Does it matter whether it's powered by gas, or does it matter whether it's powered by electric, right? But because we are still at EV, because the adoption is still not there. Once you get to a certain stage, we don't even make that difference already, right? So I think in 10 years from now, everything is going to be, whatever that can be tokenized will be tokenized, and whatever that my standpoint is that it will reach a state where everything is going to be value, right? I don't see tokens. I don't see crypto being differentiated from fiat.
And whatever works better on chain will move there. So yes, and with that fascinating conversation, and let's with that I'd like to end with this whole 10-year view. You are kind of talking about multiple aspects of how maturity will come. How, I mean, at that analogy of sort of 2-3 chains, and it's sort of really strange to see that there has been so much chain activity, and L1, L2, so really that's something where we'll see a lot more consolidation. It's going to be a hybrid world, not just decentralized for the sake of it, and it's a very pragmatic view. Certain things work well in a decentralized architecture, certain things don't, but there is a way of kind of designing around that. So that's an important point. Stablecoins, yes, the foundation of kind of Web3 in many ways. And BTC will obviously be the big one as the sort of store of value, the new digital gold, where we've already seen that. And That's there. And finally, with DeFi, everything in finance that will be better and more efficient on chain on DeFi rails will move there. So yes, Alvin, fantastic having you on Alpha Anash. Thank you.
Thank you. Thank you for having me. Enjoyed the discussion very much. Thanks, Sri.